Hi, everybody. I wanted to talk to you today about a stock that's on my radar right now called Ally Financial. This is a financial stock that's kind of under a lot of people's radar right now. Ticker symbol is ALLY. And if you hadn't heard about it too much, it may be because it hasn't been a standalone company for a while, even though the business has existed for a while. Ally used to be a subsidiary of General Motors called GMAC Financial. And it came on my radar earlier this year when Warren Buffett and Berkshire Hathaway revealed that they had bought a stake in the bank in the first quarter. In the second quarter, Berkshire more than tripled its stake and now owns more than 9% of Ally, a stake worth a little over $1 billion. So it really got me to look a little bit closer. And it's a really interesting bank stock. I love bank stocks, and this one really stands out to me for a few reasons. And it's really not hard to see why Buffett might have liked it so much. So just a quick rundown. Since it used to be a part of General Motors, it probably won't surprise you too much to know that Ally's primary business on the lending side is auto loans. They are one of the biggest auto lenders in the United States. They originate over $10 billion of lending volume in just the auto industry every quarter. And the company's really evolved beyond that since it split off from GM. It's now a full functional online bank. It offers mortgage loans, it offers personal loans, it offers credit cards all on the lending side. It also offers a high yield savings platform that's attracted more than $140 billion of deposits so far. It also has an investment platform, both a brokerage and a robo advisory. So there are three main reasons why I think Ally is such an interesting investment and why I think Berkshire really took an interest in it. Number one, it's very profitable. Ally is an online bank, first of all, which gives it a low cost structure. It doesn't have to pay for branches and things like that. It specializes in auto loans, which have higher interest rates than things like mortgages, but are still secured loans, unlike personal loans that if a customer doesn't pay, there's nothing the bank can repossess. So just to kind of put some numbers behind that, during the second quarter, Ally originated a little over $13 billion in auto loans at an average interest rate of 7%, 7.8%. It's the average yield it pays on deposits is a little under 0.8%. And with a net charge-off rate, meaning the debt that's uncollectible of less than 0.5%, it's really not tough to see why that can become a very, very profitable business. You're getting 7.8%, you're paying 0.8%, and you're losing 0.5% to customers who don't pay. So, very profitable business. They have consistently generated higher returns on equity than most other banks. So, profitability is one. Second one, the stock is cheap. Ally trades for just 5 times earnings right now. That's 5 times trailing earnings and 5 times forward earnings. So it's not like that it traded for a great multiple of past earnings and it's expected to fall off a cliff. It's still cheap based on forward looking and rear looking earnings. It trades for less than book value, about 95 cents on the dollar of what its assets are worth. So very cheap bank stock as well. And number three, Ally has been very shareholder friendly when it comes to returning capital. It pays a very nice dividend that's grown over time. Ally yields about 3.3% and also has really prioritized share buybacks. With the stock trading for less than book value and a 5 times price to earnings multiple, it's really not surprising that they've prioritized buybacks, but it's the extent of the aggressiveness that really stands out to me. In the first half of 2022 alone, so over the past 6 months, Ally has spent $1.2 billion on buybacks. That's more than 10% of its market cap in just 2 quarters. They're really prioritizing buybacks. Over the past 5 years, Ally's outstanding share count has been reduced by more than a third because of these buybacks. And when the stock's trading at an attractive value, that can really be a big driver of shareholder returns over time. Kind of what Berkshire's doing with its own buyback. So it's not surprising that that might have gotten Buffett interested. This is not a risk-free stock. It is very, very dependent on the health of the auto lending business. If the auto lending industry has some headwinds facing it right now, the supply chain disruptions, for example, that's something to watch. And the economy is kind of teetering on the brink of, are we going to have a recession? Are we not going to have a recession? During a recession, you can see loan defaults tick up past that 0.5% figure that I mentioned earlier, resulting in kind of narrowing profit margins and things like that. There are some risks to keep in mind. There's no such thing as a free lunch in the stock market, and this is no exception. But having said that, the risk reward dynamics seem to make a whole lot of sense here, especially at that low valuation with that outstanding profitability I was talking about. So that's one that's on my radar. I am considering pulling the trigger on an investment in Ally in the next week or so. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment, so I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 268%, so go to fool.com/Frankel to get your 10 stock picks now.